Today, we delve into the most impactful global news stories shaping our world. From significant cryptocurrency market movements to regulatory changes, we have a lot to cover. Stay tuned as we break down today's top 10 stories you need to know. Several key blockchain developments are on the horizon that could impact the cryptocurrency market significantly. Innovations in technology are continually shaping how cryptocurrencies operate and interact with traditional financial systems. As more companies explore the integration of blockchain technology, new use cases are emerging that could enhance efficiency and security. Notably, advancements in interoperability between different blockchains are being pursued, aiming to create a more cohesive ecosystem. Additionally, the rise of Layer 2 solutions is addressing scalability issues faced by major networks, allowing for faster transactions and lower fees. As these developments unfold, they will likely attract further investment and interest in blockchain technology. The cryptocurrency community is keenly observing these trends, anticipating that they will drive the next wave of innovation in the space. Keeping an eye on these developments will be crucial for investors looking to navigate the evolving landscape effectively. Market volatility continues to be a defining characteristic of the cryptocurrency landscape as investors navigate unpredictable price movements. The fluctuations in market prices are often driven by external factors such as regulatory news, macroeconomic trends, and technological developments. As investors react to these changes, trading volumes have seen significant spikes, indicating heightened interest and engagement. Analysts warn that while volatility can present opportunities for profit, it also poses risks for less experienced traders. The current environment necessitates a cautious approach, with seasoned investors advising newcomers to conduct thorough research before making decisions. As the market evolves, the potential for both gains and losses remains high. Observing how external events influence price movements will be crucial in the coming weeks. The resilience of the market will be tested as it continues to adapt to ongoing challenges. Dogecoin's community engagement is growing as supporters rally around the cryptocurrency. This engagement is characterized by various initiatives aimed at promoting the token and increasing its visibility. From charitable donations to social media campaigns, the Dogecoin community is leveraging its strong online presence to boost interest in the asset. Recent events have showcased the community's creativity in fundraising and engagement strategies, driving new interest from both retail investors and the crypto curious. While Dogecoin has historically been characterized as a meme coin, its community-driven approach is helping to solidify its place in the cryptocurrency ecosystem. As engagement continues to rise, there is potential for increased adoption and usage of Dogecoin. However, it remains to be seen whether this grassroots movement will translate into long-term price stability. As the community continues to innovate, it will be interesting to see how Dogecoin evolves in the coming months. The legal battle surrounding XRP is ongoing, with significant implications for both Ripple Labs and the broader cryptocurrency market. As the case progresses, investors are closely monitoring developments that could set precedents for how digital assets are regulated. Ripple's ongoing litigation with the SEC has raised crucial questions about the classification of cryptocurrencies and their regulatory status. The outcome of this case could have far-reaching effects, potentially impacting other cryptocurrencies and shaping regulatory approaches. Despite the uncertainty surrounding XRP's future, there remains a strong community of supporters advocating for the asset. This legal situation has led to increased volatility, with price fluctuations reflecting market sentiment regarding the case's progress. As the legal proceedings unfold, investors are advised to remain vigilant and informed. The resolution of this case may not only determine XRP's fate, but also influence regulatory frameworks for other digital currencies. Solana is gaining significant market attention as it continues to showcase its technological advantages over other blockchain platforms. With its high throughput and low transaction costs, Solana is positioning itself as a strong competitor in the decentralized application space. Recently, several high-profile projects have chosen to build on the Solana network, further establishing its reputation as a robust platform. Investors are taking note of this momentum, leading to increased trading volume and price appreciation for SOL, Solana's native token. Analysts believe that as more developers flock to Solana, it could lead to a network effect that enhances its value proposition. However, challenges remain, including the need to maintain network stability amidst growing adoption. As developers continue to innovate on the platform, Solana's trajectory will be closely watched. The coming months will determine whether it can sustain this upward trend and fend off competition from other blockchain networks. Recent regulatory changes are having a profound impact on the cryptocurrency market, shaping how businesses and investors operate. Governments around the world are increasingly implementing frameworks to oversee digital assets, aiming to enhance security and protect consumers. These regulations are designed to address issues such as fraud, money laundering, and market manipulation. As a result, companies are adapting their strategies to comply with these new laws. While some view these regulations as a necessary step towards legitimacy, others express concerns over potential overreach that could stifle innovation. The evolving regulatory landscape presents both challenges and opportunities for the industry. Investors are closely monitoring these developments as they can significantly influence market dynamics. Companies that proactively adapt to regulatory requirements may gain a competitive edge. As the landscape continues to evolve, ongoing dialogue between regulators and industry stakeholders will be crucial to finding a balance that fosters growth while ensuring security. Retail interest in cryptocurrencies is rebounding as more individuals seek to capitalize on the recent market upturn. Following a period of uncertainty, consumers are once again exploring digital assets as a means of investment. This resurgence is evident in the increased traffic to cryptocurrency exchanges and a rise in new account signups. Analysts attribute this recovery to a combination of market stabilization and improved educational resources for new investors. With social media platforms playing a pivotal role in disseminating information, more individuals are becoming aware of the potential benefits of cryptocurrency investments. The rise of user-friendly trading platforms has also lowered barriers to entry, making it easier for retail investors to participate. As retail interest grows, it could lead to increased market liquidity and further price appreciation for digital assets. The ongoing developments in the cryptocurrency landscape will be crucial in sustaining this interest. Continued education and transparency will be key to maintaining retail investor confidence as the market evolves. The cryptocurrency market is witnessing a remarkable surge in ETF inflows, indicating a resurgence of interest from institutional investors. Exchange-traded funds, or ETFs, provide a way for investors to gain exposure to cryptocurrencies without the complexities of direct purchases. This trend highlights a growing acceptance of digital assets within mainstream finance, as traditional investors seek diversification. Analysts emphasize that the uptick in ETF inflows serves as a vital barometer of market health and investor confidence. Bitcoin and Ethereum remain the cornerstone assets in these funds, and their performance is pivotal in attracting further investments. Additionally, the regulatory landscape is shifting. Authorities are becoming increasingly receptive to cryptocurrency ETFs, which could facilitate the introduction of more innovative financial products. As these funds gain momentum, they may contribute to stabilizing prices and mitigating volatility in the often unpredictable cryptocurrency market. The future of cryptocurrency ETFs will hinge on continued regulatory advancements and evolving market sentiment. Investors are particularly focused on upcoming regulatory decisions that could unlock even greater potential for growth and innovation within this dynamic sector. Ethereum's Treasury holdings have seen a significant increase, marking a shift in investor strategies. This surge reflects a broader trend within the cryptocurrency space, particularly driven by the growing interest in decentralized finance, or DeFi, which has become a fundamental component of the ecosystem. As investors seek to diversify their portfolios, Ethereum's robust smart contract capabilities position it as a compelling choice. Recent reports indicate that institutional investors are increasingly allocating resources to Ethereum, reinforcing its market standing and attracting attention from traditional finance. This trend underscores Ethereum's potential as a foundational layer for future blockchain applications, with a burgeoning number of projects built on its network. The heightened demand for ETH is further fueled by recent upgrades that enhance the network's scalability and transaction speeds, making it more appealing for both developers and investors. As Ethereum solidifies its role in the market, the growth of its treasury may lead to enhanced stability and increased confidence among its holders. Looking ahead, the coming weeks will be pivotal as market participants assess whether this upward trend will persist in the face of potential regulatory scrutiny and unpredictable market conditions. Continued investment in Ethereum could pave the way for further innovation and adoption in the blockchain space. In a remarkable turn of events, Bitcoin has surged past the $80,000 mark. This significant increase has been attributed to a combination of rising investor confidence and strong demand in the market. Analysts point out that this surge is not just a random spike, but part of a broader trend where institutional investors are increasingly viewing Bitcoin as a safe haven asset. Historically, Bitcoin has often been seen as a digital gold, a hedge against inflation and economic uncertainty. The cryptocurrency market as a whole is witnessing a rebound from the volatility experienced earlier this year, where prices fluctuated dramatically due to regulatory concerns and market sentiment shifts. With Bitcoin leading the charge, many other cryptocurrencies are also experiencing notable gains, signaling a renewed interest in the sector. The bullish sentiment in the market is further fueled by the growing acceptance of cryptocurrencies in various sectors, including finance, technology, and retail. As Bitcoin reaches this milestone, it raises questions about its future trajectory and whether it can maintain this momentum. Investors are now closely watching how regulatory developments might impact the market moving forward. This surge could potentially attract more retail investors who have been hesitant in the past. Looking ahead, analysts predict that if Bitcoin can sustain its position above this crucial price point, it may pave the way for further institutional adoption and broader market stability. Thank you for joining us for today's news roundup. Which story surprised you the most? Don't forget to like and subscribe for more updates.